Hey everybody, Courtney Smith here with our Wall Street winners for June 28th. We're halfway through the year. Let's get going because the next half of the year is going to be more exciting and more important than the first half. A lot like this disclaimer. Okay, so the S&P breaks to new highs. Purple predictor accelerates to the upside, but not anywhere near new highs. If you look just below the purple predictor, you'll see a light green line. That's the relative strength index. The S&P breaks to new highs, the RSI does not. That's called a momentum divergence, and usually what it means is that the price of the S&P should retrace for at least 2 or 3 days this week. So it doesn't have to be a big retracement, it just has to retrace a little bit. So look for this week to not go anywhere, okay? Chop, 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 a little down, a little up, maybe more a little down than a little up. The Dow Jones, also kind of a mixed bag. In the upper right-hand corner, we see that the buying pressure finally exceeded selling pressure for the first time in a couple of weeks. But the Dow didn't even make higher highs than we saw earlier in June. It was that weak. And if you look at the little green line in the middle of the chart, that's RSI. Just like in the previous chart, it's not anywhere near making new highs. So really, not much going on here. The NASDAQ breaks to new all-time highs, but the purple predictor, okay. I mean, this chart's okay, but it's not great either. So we have 3 major indexes, all of them, what can I say? All right, seasonality, we're on a neutral signal in the stock market. We're on a buy signal in utility. I shouldn't say a buy signal. The seasonality is bullish, but we're making lower lows. Now, I need you to think about this. When seasonality is bullish and we're making lower lows, that's really bearish. Because that means that when the bearish time comes in October, Utes could collapse. Okay? If they're going slightly down when it's supposed to be going up, that is really bearish. And when the bullish seasonality pressure is gone, then Utes are going to collapse. Now, I'm going to stop here for just a second because this is really, really important. So right now, we've been following the red line, which is post-election year after incumbent party loss. And we've been following this purple line here. And this is first year of a Democratic president. And they've been running pretty closely, pretty much the same, a little bit more bullish for the first, for a Democratic president, then incumbent party loses. But they remain really running along the same until here. And at this point, we start to see the red line move lower, but the purple line just keeps going up. So obviously we hope that the purple line is the correct seasonality for this year, but it could be the red line. We won't know until the middle of August. In the middle of August, we'll start to see if we see bullish price action. We have to assume that this seasonality is the correct one. If we start to see the market sell off, we have to assume that this one is the correct one. But for now, look for the little shake and bake this week. I showed you the RSI momentum divergence, be down a little bit, then we'll have a little bit of a rally, 3, 4, 5%. Then we'll see maybe a 5 or 6% drop, or we'll see a 2 or 3% rally, depending on which seasonality it is. So this is really fascinating to me. Now, asset allocation, a big part of the big bull market we had over the last year was caused by money coming out of bonds and into the stock market. Then we got into this sideways pattern, and this is one reason why the stock market has not gone up, is because there's no money being sucked out of the bond market. It's just the stock market's all on its own, and, well, it's not sustainable. Then we had the little shake and bake drop here, and we've rallied back up, but we're not anything close up here. So we got a little bit of money out of the bond market, but we need more to really have a bull market, and we're not seeing it. Our stock market risk indicator also sluggish for quite a few months here, really chopping around. We've seen it nicely strong this week. That would be great. A break to new highs would be very bullish for the stock market, but we don't know that that's going to happen yet. Global shares looking pretty good. The yield curve continues to drift lower. Technically, that's negative for the market. market doesn't like a negative or flat yield curve, but it's wide enough that it's not a big deal at this point. And when we talk about bonds, I think we're going to start to see bond yields go up, and that's going to cause the yield curve to go back up towards the old highs. Here we go. Bonds. Got the rally in bonds, but the purple predictor went sideways. The smart money didn't buy. They sold these rallies. Price action over the last week is terrible. I shouldn't say terrible. It's not good, okay? I think that this was the high in the whole move, and now we're going to start heading back lower. So that's going to make the yield curve go in the other direction. Let's take a look at some of our key indicators. CRB up here, down a little bit, no big deal. Gold down hard, that means lower interest rates. We had the blue line, that's 10-year treasuries in Germany. It came down and then it kind of rebounded up. So when we put all these things together, once again, kind of for treasuries. But our fully paid up members, they know I'm going to show them some other information that makes a stronger suggestion. But basically, probably see the bonds move a little bit lower here. Not a big bear market, but a little bit lower. So if the bonds move lower, that means interest rates are moving higher, which should get some bid into the dollar. If the dollar bids up a little bit, then we're going to see gold go down a little bit. And that's exactly what I think is going to happen. Our gold key indicators. Top one here, let's call it negative to neutral, pretty negative. So our key indicators are still remaining somewhat on the bear side, not wildly bearish, but still on the bear side. So we still don't want to get long gold. Crude oil continues to move higher, as I told you that it would. Our next target has got to be $80 a barrel. A lot of people are talking about $100 barrels. Now, let's not get carried away yet. It's a bull market. We're making money. That's all we need to know right now. We don't need to know where the eventual high is. But I can tell you, I'm watching all the time for reasons for a high. One of the things that's supportive of the market is that the American producers are not yet back into the market on any sort of significant way. So that's allowing this price to keep moving up closer to $80. Bitcoin broke to new lows over here, as I told you it would for the last couple of weeks. I think we're going to break to even lower lows. Purple predictor is getting better. It is getting better. Let's call it neutral now, whereas it was negative before. So that is supportive of the Bitcoin market. But nonetheless, the trend is down. And we just simply follow the trend because we like doing what the market tells us to do. All right, freebies. Love having you here. You really should be a fully paid up member, of course. Why? Because go to YouTube, watch this video, and you'll see our thesis for oil that's played out perfectly, as I told you it would for weeks now. And I have a special report where I tell you the stocks that I want to buy to make money in this special report. At the same time, also on YouTube, go watch this, the Biden boom bust. And I've got a special report. If you subscribe to Wall Street Winners, I'll give you the special report that has 5 stocks that I think are going to crush it in this Biden boom. So there's 10 stocks. You'll get both of these special reports if you subscribe now.